Okay, let's try that one. Testing 1, 2, 3. Yeah, it just wasn't working. Yeah, someone said I was picking my nose. No, that's my microphone, dude. See? Not the pick in the nose. Hey, good morning, everybody. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So nice to have you here during this sunrise. Yeah, good sunrise. How you doing, huh? Hey, remember how we used to meet and it was pitch black? Now the sun rises when we meet. How nice is that? Hello, my name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com. We're an ECN. You click a button, you say buy Euro USD, and we enter that immediately, much faster than other brokers, into the foreign exchange market, into the interbanking system. No drama, mama. Prices are fair, spreads are reasonable, execution's fast, customer service is excellent. Hope you enjoy these webinars. Maybe we'll earn your loyalty. You'll open up a demo account, and one day when you're ready to trade real money, you'll choose us to be your prime broker for your successful Forex trading business. Hey, guess what? 7:30 in the morning. We're here Monday through Thursday. And then every Friday, we're at FX Street, where I'm Forex Speaker of the Year. Cool. Thank you for your loyalty. Okay. What's going on in Asia today? Not much. Yen got super strong, though, eh, Brew? Chinese FX reserves, first rise in 5 months. Everything else is not really a big deal. Seems like a bunch of people thought there'd be a some sort of bailout by the Bank of Japan if we hit 110. Oops, guess not. So, buy some yen. Joseph says down to 105. Yeah, maybe. This is where you just do technical analysis. So remember, 3 days before the collapse, when everyone was selling yen, I said, get ready. Time to buy some yen. Drive it down to 110. And I said, maybe we'll look for opportunities to buy down there. Some people bought it, had 50 pips profit. Well, it's collapsed. Happens, huh? But at least you were selling into the drop instead of buying the dip, right? Ryan says, what happens after monthly S3? I have no idea. It doesn't happen that often, Ryan. Okay? But remember, you can only buy at support with a reversal pattern, right? And even then you're nervous because you shouldn't be the one reversing the market. So you could have a reversal pattern on a 5-minute chart, but really you need a reversal pattern on like an hourly chart, right? So, well, if you didn't get that, keep selling. There's only, I guess we can look at it a little bit later. There's only really one spot where we were frozen before the Asian session, and then boom, it took off again, right? So you probably were interested at 110 and never really got the opportunity. So you just keep backing out, right? That's all. Just keep backing out. Remember what I teach you. Have 2 or 3 levels of support in which you may consider buying. Very specific language. Doesn't mean you buy it there. You might consider it if you happen to be a bull. If you don't get the op, you don't take the shot, right? So anyways, yeah, yesterday was fantastic. The day before was fantastic. Um, because of the potential support at various places, I'm not, today wasn't a huge day, right? So anyways, what else going on? Oh yeah, meeting minutes. Okay, so you've had some chances to read it, and it was pretty much like I discussed earlier this week and last week, right? Where there's sort of a divergence between people on the board. I was assuming that it was basically Grandma Yellen and maybe one other person. Well, it might not be a surprise to you, Ryan, but because we talked about it, but it might be a surprise for the rest of the world. Now the rest of the world is realizing there's potentially only 2 rate hikes, but we've been talking about that for, I don't know, a month, right? So, anyways, it happens. At least now people know or should know, or, I guess if the Wall Street Journal wrote about it today, then most people now know. You just happen to know a month ago. Oh, is that what you heard? That's funny, huh? Yeah. Yeah. Okay. So, what's happening in the European session? Not much. Okay. Again, this is, oops, some people were watching this, and it's nice. They feel good that money isn't pouring out of the Chinese economy. That's good. Maybe that's a bottom, maybe. Or maybe China's just got some capital controls going. Sorry, I just had to eat. Okay, but no big news there. So this is just, money flowing around, huh? I don't know. When do I sleep? Weekends used to be good for that, but now I'm going to be in school for the next 4 years. So yeah, I call it a hobby, right? Some people golf. I go to Harvard. All right. So American session meeting minutes just came out a few minutes ago. Not a big deal. Don't think we really learned anything. They were thinking about cutting interest rates another 0.1%, right? Ryan, don't ever expect V-shaped reversals. Okay, that's why I make a great effort. Ryan says, "What happens after these big moves?" Right? That's why I go out of my way in my book to have a nice analogy that can be remembered. The Forex market reverses like an old man easing into a hot bath, right? So what happens is you get a move like this on the ends. What they are stops being hit. which which drops the market, which hits other stops, which drops the market. But it's, you know, I would never expect something like that. Okay. So at the very least, you should expect, I guess I ran out of space, but okay. No, it's just what Sally Pup says. Maybe different time frames it would do that. I just, I train myself to just say it doesn't happen. Cream says maybe news. Yeah, well, a spike on news isn't a trend. Yeah, that's just some price action, right? But we're talking about, this has been down, straight down for 5 days. Is it going to head straight up? I'm trained to think no. So anyways, one other thing. How do I clear this? Can I even clear it? How do I clear it? Clear it. Like that, maybe? Yeah, okay, good. And then today, Yellen speaking with Greenspan, Bernanke, and Volcker on stage. Holy schnicker-schnacker. Wonder if American Express can get me tickets, huh? So that's pretty cool. Draghi speaks. Who cares about Draghi, Hans? Draghi. How dare you say that in the presence of Yellen, Greenspan, Bernanke, and Volcker? Yeah, so anyways. So he's going to talk about the meeting minutes, right? So let me tell you what he's going to say. Most on the committee favored 10 basis point rate cut with possibility of doing more in the future if needed. Okay? There you go. Now, the council did discuss just making a massive, crazy, redonkulous cut and then come out and saying that's, we're one and done. They kind of screwed things up and kind of said that. Maybe that's why Bernanke was, Draghi was thinking that. They had this discussion and then they made their decision and then they came out and then they screwed it up. Didn't he? So anyways, so after all of this, nothing really happened today, eh? So Baltic Dry Index, great. Weekly jobless claims, great. Okay, so no big deal. So why don't we play the happy music and then go through the markets? I'd like to catch up on commodities and try to. I mean, we all know yen is strong. Great. Wow. Really? Okay, but let's figure out if anything else is being affected or if this is just pure yen. Okay. So play the happy music. Let's go. Yeah, if you're watching this as a recording on YouTube or something, swing by Forex.Today. Attend the webinars live, dude. The cool kids. Whoop, whoop. There's some charts. It's good to have some eye candy. Who up? Yeah, you know what? I never have problems selling euro. Okay, did anyone actually go out and write down their strategies for every major currency, not currency pairs, just to say something basic like euro, bear, and 3 reasons why? Andrew says yes. Short and medium term. That's good. I'm all right with that. Kareem says yes. Joseph said yes. Manny, yep. Artem, yes. Bustyan, yes. Okay. Fred is trying to do pros and cons for each. I don't want pros and cons for each. So Fred, flip a coin. You know what I mean? Think of it as war, right? Oh, well, we debated whether we should take the machine gun nest. But some felt it might be risky. So we just sat there in the middle of nomad's land. Some people, we sat there in the foxhole. All right? So, yeah, you got to do it, right? Okay, there's no, yeah, just make a decision. And I don't even care if you're wrong. Oh, yeah. Yeah, pick a net, right? If you're going to shoot at the net, pick one net, right? I don't know. But whatever. So one of these things is you may have said this, I don't know, like what is it? It's the 7th. A week ago. A week ago we were here, guys. Do you remember? And I was talking about that euro's up, and I'm like, great, doesn't matter. Nobody's buying the euro. Why would you buy the euro? They have negative interest rates. They're slashing everything. They're doing everything they can to weaken the euro. Yeah, it's up, but because too many people bought the dollar. And they found out they're not going to raise interest rates 4 times this year. So it's overvalued. Euro USD goes up, this goes up, but no one's buying it. So make a decision, right? Or if you're a bear on euro, you wait and you figure things out. Well, we did go M3 to M1 this week, which is kind of fun, isn't it? And then we just kept going. Well, thank goodness you had a strategy and there was not one fiber in your body that would consider buying this. Good job. Or you were a bull and you waited for the pullback and this was your buy zone. Oh, well, it didn't, maybe got in there and took a small loss. Okay. And then maybe down here, well, that's not a great place to do it, but you could if you got the entry and maybe took that and lost a little bit. Well, you've never had any other opportunities. Well, very good, right? Michonne says, took a profit at 125. Feels stupid today. No, you should never do that. And I'll tell you why. Because first of all, this is a tough gig, and keep staying calm and focused and confident supremely important. Buck 25, I would actually say was a dumb place to get out. If you don't mind me giving you frank feedback, the place to have gotten out was in here. I guess you waited for this lower cluster, but even then, come on, that's not the right place. So if you were to get out, I would have said more like 125 and some change, sort of in here, because you're playing the weeklies. The monthly, that's not even the right kind of monthly pivot to play. Okay. Maybe S1 if you got out at 124 blindly, maybe. Okay. Oh, so yours is down at, okay, mine's higher than that. Mine's buck 25 and a quarter. Okay, maybe we're splitting hairs here, but anyways, it's not whether you're right or wrong per se because no one can predict the future, right? I think we can agree. Oops, don't click that button. All right, I thought that was my drawing tool. No one can predict the future, but you can analyze the market. Okay, you can analyze the market, and so you get to areas that are logical, intelligent, likely, probable areas of support, or and support could be risk, right? So let's say areas of risk. And so the logical, intelligent move here, if you're a bear, okay, this is right out of the book from a million years ago, right? M3 to M1 is the conservative target. S2 is the aggressive target. This is the likely direction of the week if you're a bear. Okay, straight out of pivot point analysis, pivot point theory. Okay, so what that says to you is anything lower than that. Let's do this in a different color. Anything lower than that are pips that are less and less likely in normal market conditions. Another way of saying it is those pips you cannot count on. It wouldn't have happened the week before, the week before that, 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 the week before. Okay. So if you got out, let's say in here, okay. So I'll give it to you, the buck 25. Fine. I think that's a little low, but you know, whatever. If you got out of there, and maybe you had it plugged in like this whole area was support. Okay, fine, 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 fine. Good, good, good. Okay, this is the proper place to get out, especially if it was consolidating. Then it should be reinforcing what you thought that it consolidated there before, right? These, if you just sort of held on and look the other way and let it fall, then there's a couple of things. You might be trading this on a daily or a weekly, maybe you're trading monthly, you're going for monthly M1, monthly S2, something like that. Okay, then you must have big stops and all that kind of stuff, or it was a dumb trade, meaning you didn't really know what was going on and you got supremely lucky on this and you made a ton of pips. And don't worry about it, you'll give it back. Don't worry, you'll screw it up. You screwed up this one and made money. Don't worry about it, you'll screw up the next one and lose money. It'll all work out, right? If you analyze this area as a trader and said, whoa, this is a hardcore level of support, this is going to probably consolidate here and maybe potentially reverse. You see what I mean? So you look at it and you say, I need to manage my risk appropriately here. And if you saw logical, intelligent reasons to get out, then you're supposed to. So if you bailed on this at 125 and it dropped all the way to 123, don't feel stupid, feel smart. You did what you were supposed to do. And when I say you have to have discipline, that's an example of discipline. That's a hard thing to do. And what you don't want to do is say, "Oh, well, if I just hang on a little longer, maybe it will." And it does. But the problem is, on the long run, it most often doesn't. Okay? Most often it will go up. Okay? So you're supposed to do what you're supposed to do, what you're supposed to do, what you're supposed to do. And along the way, you probably had opportunities to get back in on the downside if you were like a small time frame trader. Look at this, guys. Right? So let's say you got out where you're supposed to. Then what? Break support, pulls back, sell. Right? Down, pull back if you wanted. Or you could just do it kind of like this way, right? I mean, depends on each one of these little cycles. Let me clear this. Each one of these little cycles, if you're scalping, are trades. Each one of these, right? Down, sell, down, sell, down, sell, down, sell. Uh-oh, right? And then you take the bigger one, boom, right? Down, back, sell, back, sell, back, sell, back, and then consolidation. Okay. Okay. The most logical ones, I guess, are these. Let me show you. Okay. There's all kinds of ways. As soon as you get the low, so look at this. You're down here. You go back and you drag this across. That's your new sell zone. Okay. Once it makes this low, you drag this one across, and it represents a potential sell zone. Okay. Then once you're down here, you drag this one across. That's a potential sell zone. Okay. Once you're down here, you drag this one across, right? And what you might find is this is basically a fib on maybe on a 15-minute chart. Okay. So you got all these little 5-minute scalps, and then you got a 15-minute pullback drop, and it's just a 3A2 on the 15. Okay. And then it does this over and over and over and over again. Okay. It's one way of doing it. How about oscillators on the 5-minute? Do you buy extremely oversold? No. What do? Well, the market's down. Okay. So you're looking for these things. Okay. Maybe that one, maybe that one. And time of day is messing this one up, right? But you should be waking up because we're getting closer and closer to the New York Open. Okay, so there's all kinds of things you could be doing to follow up on this. Nick, when I'm putting like this, I generally don't move my stop. Okay? That's just too much micromanaging for me. So you could just pull the trigger, 25-25 OCO, right? So 25-25 OCO, 25-25 OCO, 25-25 OCO, 25-25 OCO, and this probably survived, right? 25-25 OCO, 25-25 OCO, and eventually they're clustering and breaking, Yeah. So like there's two schools of thought, right? One, you're afraid of losing money, so you manage your stops, and that's the majority of your time spent, right? Because you just can't stand a 12 pip loss. Or you're obsessed with awesome entries, versus being obsessed of potentially losing, 20 pips. I'd rather just get ready to catch the next pullback and take another shot. I'd be obsessed ready for that, right? Right? So what have I told you, right? Down, sell at the 21. 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 Down, right? Pulls back, resets on the higher time frame. Right? What did it do? Down to the 21, right? Just it's the same thing. It's the 15-minute chart now, but it's just down back to the 21. Sell that, dude. Remember, that's why we put those colorful lines there. When it's trending, you sell it at the 21. Right? So anyways, we've overdone this. Okay, right? We've overdone this. You should know this by now. Let's go over here. It is riding the 5. It's all the same thing. In that case, you're riding the 21. But it's all the same thing. You could be riding the 5 on the hourly on that, and it'd be the same thing. I think the way I describe it is if your price is below the 21, you're absolutely, totally, emphatically 125% bearish. There's nothing on this planet, nothing that could be said, nothing that could be done to make you buy it. You're seller and you're aggressive. I think that's how I describe it, something like that. Okay, Okay, let's follow up on crude. Neato, huh? Another up day. Who would have thought that? Now, do you ever do this with me where we just do, let's say, just technicals and maybe like market sentiment kind of stuff, and it's been up for all these days. So I say, well, now it has to come down, and so we start identifying where the price action is and where the fibs are and where key psych levels are, and we kind of start guesstimating. And then after the fact on TV and in the newspaper, they give you all these really logical, intelligent reasons why it happened, right? Oh, well, oil traders said blah, 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 blah. And it sounds so dumb, doesn't it? There's always a really good reason after the fact. Oh, well, it has to do with you, blah, 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 blah. And you're like, well, no, it was just supposed to do it, dude. Traders sold it because it was overbought. Like, no, it was just, it's just, that's what it is. You know, I don't know. I always smile. There's always a really good reason that didn't exist 3 days before it happened, but now somehow exists, right? So, pretty nice down in here, clustered out. Do you remember the inside week? S1 to R1? Well, we got about 50 cents more to go to complete that. Okay. Now, the scary thing is I have this going up. I don't really think it's going to go that far. Okay. Remember, the thing that we were discussing is it's only technical analysis, and that if you have a double bottom high or high, you would fib it and look for the role reversal in here. So it's just technical analysis. But I have no problem of this being 30 bucks again. I have no problem whatsoever. And you really, what we've been talking about is a 30-40 range, right? But that's just technical analysis. That's just, if that's it. If technical analysis was the only thing that mattered, this would be a hardcore buy and we'd be on our way to 50. Okay. In fact, we'd be on our way to 40, what is that? 48? 48. Sorry. But, I think there's more than that. How about this? If you were a bear, you'd get ready to sell hardcore now. Okay, guys? Are you a bear? If you're a bear, you would reverse fib this sucker, right? Let me make sure I get this one. There we go. You are not alone. Right? You'd reverse fib the sucker. Ciao. And so you would probably 50% it down. So remember, the bulls bought it at 50%. Now let's say the bears sell it at 50%. They're going to go down to 1382, which is basically 32 bucks at the M1. I'm okay with that. You see what I mean? I'm okay with that. Oh, Nick says there's so many lines in the chart. Yeah, I suppose. Yeah, I suppose that's true. Um, it's fascinating when people bring that up because I've been doing this for so long. I only see what I'm looking at. So I apologize. I feel right. I feel my charts are very, very simple and clean, but maybe because that's all I'm looking at. So, like for example, there's so many lines, but I just these are monthly pivot points. These are weekly pivot points. So I'm done. That's all it takes. I'm done. There's a cluster here which might be interesting. Okay. So and then now I don't need to look at them anymore, and it's just like gone, right? Just okay. And then of course we've already done this analysis, but this is where we are in the cycle. Okay. I don't think we're going to go to 85 today. Okay. So I'm just looking at up here, resistance zone, down here, supportive zone. Looking at the price action. So eyeballing where the support and resistance is. And I'm looking at very, very particular things, right? Okay. Very particular things. If a chart looks convoluted because we got 9 weeks of analysis written on it, then you just let me know and I can go back through it. Right? Like here's the S&P 500, right? We're trying to step our way up. Okay. You guys remember doing this? I never know if you do or not. We identified this as support and this is resistance. And I was worried that even though most people make money on the way up, that this would be the head and shoulders that brings it down to another level, right? I don't want it to do that. In fact, I'd like it to kick up here. Okay. That's what I actually want it to do. But that is the vulnerability. And we knew that vulnerability existed because of this move from here to here, right? And that's when I drew all these lines. And then I started doing like shoulder analysis and stuff like that. And it only had to do with this pullback because this pullback is too big for a bull. There was a lot of profit taking, and really that's the all-time high, isn't it? Pretty close. Okay. So another way of saying it is we're much closer to resistance than we are to support, right? So we can have some vulnerability off of this stuff. So, if you got a reversal pattern in this area, wouldn't that be a concern based on this stuff? If you're at resistance and you get reversal patterns, that could be bad news bears if you're a bull, right? Okay. So that's what we talked about a couple of days ago when we were down here. We were already setting up the head and shoulders, right, when we were here. So again, if this big drop is 100% of the last rally, it's not bullish. If you develop a neckline, then you're going to develop a shoulder line. And if that fulfills itself and you get a head and shoulders, what's the most important thing about a head and shoulders? That it has a trend. Most people screw that up. You can't have a reversal pattern without a trend because then you're not reversing anything. So this looks like a good strong trend. 55's in control, which already tells us we're vulnerable to consolidation, right? Huge 100% drop kills the uptrend, develops a neckline, you develop a shoulder line, and if that comes up and drops like a ton of bricks, this will reverse. Okay. And I remember laughing that, again, universities teach their college kids that it's impossible to predict the stock market. I'm like, you know what? There's a lot of people that make a living predicting the stock market. And there's a lot of people that make a living telling other people that it can't be done. Are we talking a big reversal? Well, how would I know that? Okay. So I can tell you how to do technical analysis because this is a technical pattern, right? So I don't know. Let me go back to the 4-hour. So let me zoom in here on one click. Hopefully it's not too much. You take the distance between the crown, top of the crown or the top of the head to the neckline. Okay, let's do the neckline there. Okay, you could be a little lower, whatever, it doesn't matter. Then you take this and you put it on the neckline at the point of break. So let's say over the next, couple of days, the break point's here. A couple more candles, right? So this is the neckline, let's say. Price comes back. Okay. So what we're looking at now, guys, is price continues down. Let's say pulls back and then breaks. And I'm measuring now from the point of break. Okay. And the projection now is the distance from here to here, which I've done with that extension tool. So the target is weekly S2. Okay, that would be the target. Okay, it's also the 4-hour 200. Okay. So Ryan says, yeah, so that'll probably take to next week, right? Yeah, which means these pivots are going to change, and also this EMA is moving up. Okay. So really, by the time it all is said and done, it's probably going to consolidate here. Okay. Okay. And guess what? Earning season starts. Some people say, oh, the stock market's crashing because of blah, 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 blah. Let me tell you, you manage a lot of money. You have like $1 billion in client money, and you build on behalf of your clients stock portfolios. Okay? US equities. Is there a risk that earnings come out for these companies and they're not as good as they could be? Is that a reasonable risk? Is it possible that you get out of trades that or positions that you're not very confident about? I mean, you might have bought stuff cheap 5 years ago, but there might have been stuff you bought 5 weeks ago that you're not so sure, and you're not really got enough profit to really feel comfortable, right? So is it plausible you either jam your stop or get out of these trades now before earning season? Like just sort of portfolio management stuff? Just like totally illogical, intelligent stuff. You're like, oh, well, some of my trades I'm not so sure about. Maybe I'll just cash out and I'll look at them again in 5 weeks. Actually, kind of sounds smart, doesn't it? No, I don't mean dump your portfolio, Miles, right? I'm just saying there's going to be some stock in your portfolio that you're not so sure about, and you're like, ooh, earning season could be risky. So those are the trades maybe you go to cash on, not the whole portfolio. And then you wait, maybe in 3 or 4 or 5 weeks, you can pick it up for 5% cheaper. And you're like, oh, good. Well, glad I wasn't in that. I didn't want to take a 5% loss, but I still like the company. 5% cheaper, even better. Boom. Okay. It's only a small percent, right, John? But a small percent across, 25,000 fund managers, right? If 25,000 fund managers get out of a small percentage of their portfolio, it still adds up. And the media is going to say, oh, China, China, it's China. It's the Fed, it's the Fed, it's the Fed. It's so stupid. So stupid. And then we drag the sucker up. Okay. And every sailor knows that the sea is a friend made enemy. Every gambler knows that to lose is what they're really there for. Okay. So yeah. Anyways, there you go. Stock market. So I'm just a little worried up in this area, right? So like, where are we now? We're right. It's one of these lines here, right? So let's follow this line and holy smokes. Yeah. And the next level of resistance is going to be kind of like way up here at the all-time high. Okay. Yeah, there's some serious resistance there. Remember what I've been talking about, though? Excuse me. I'm preparing for the summer already, right? And remember, I'm preparing for consolidation and falling volatility. And so at some point, people are going to just sort of hold positions for the summer. We're not quite there yet. Yen consolidation. Well, remember what I said, and we'll see if it overlaps or not. But like last summer, 2015, August, September, October, we talked about Japanese yen being strong, right? In January, and then sort of February to the beginning of March, it would kind of, pull back a little, or, rally, yen pairs would rally a little bit, right? Regain, let's say. And then, moving to the end of March and into the beginning of April, it was supposed to get strong on repatriation, right? And that's kind of where we are now. That's more or less what it did, right? It's not perfect. Remember, I gave very specific things. Like I said, the second week of January, the yen would get strong, and I said that 3, 4, 5, 6 months ahead of time because I know because that's what I do. Um, but it happened the first week, not the second week. Oh well, you know. And then I say the yen was going to stay strong, strong, strong. No, there was going to be like a recovery period, which we went from 110 to 114 or something, right? That's not bad. It was hundreds of pips. And then I said the yen would get strong again. All right, well, okay, good. Where do we go from here? Well, eventually this is going to find a bottom, and then I think it's just kind of go up and down for 5 months. But we already know that because we've already talked about that, right? Eric says, Wayne, what broker do you use? I have a wealth management team at Merrill Lynch, so I just call my guy, and his assistant does it for me. No, it's wealth management, Anthony. So they set up things like my kids' college savings fund, and you my 401k, and my wife's 401k, and they buy some mutual funds, and stuff. Oh, Andrew did some family office stuff. Yeah, the FO industry's changed a lot in the last 5 or 6 years, big time. Well, it's my company's 401k. It's not a 401k though. What is it? It's a something like that. It's a no. I got those too. No, no, no. But anyways, yeah. It's one of these things where you can put a bunch of money in and not pay taxes. It's one reason why you should own your own company, guys. So where are we? What time is it? My gosh. What should we do now? We did some of the yens, right? Did we do Aussie? Okay. All right, so let's do a discussion here. Yen has been strong for 3 or 4 days, 5 days, whatever. Not unpredictable. As you know, fine, good, great. You want to be smart money, though, right? So sometimes I help on some of these things, right? I want you to think about it for a bit, maybe today. I want you to think about something like Aussie. Is this going to be down forever? Where is it going to be 3 days from now? Okay. Where is it going to be 7 days from now? Okay. More importantly, what behavior do you expect to carry out in this market in a few days? Now we're getting serious, huh? And I want you to start predicting the future. That's why we're all here. Right? I've been doing it now for what? Well over 10 years. Cool. I'm not too bad at it. Now it's your job, right? Ricky's got 79.50. Okay. So you're going to drive it down 200 pips down, 500 pips up. So it's time to put these ideas together, right? Ooh, look at this. Denmark just said they are prepared to print money to support our peg to the euro. Ooh. Ooh. Denmark. Way to go, Denmark. Initial jobless claims 267. Continuing 219. It's all good. It's a little high actually, the 267, but they were expecting 270. So, all right. Building permits out of Kenyatta. Big surprise. Big surprise. Much better than expected, but it's a volatile number. But it means there must be some foreign direct investment, little FDI going on Kitty Cat. I guess if everything's 30% off, right? Now millionaires can afford cab rides in Toronto. Um, Interesting stuff here. All right, so like I showed, at the beginning of the webinar, there's really not a lot. Wayne, why do you have so many screens? The chicks dig it, Richard. Um, you should on YouTube. On the YouTube, there's a video where I walk you through my screens. Yeah, it's true, right, Felipe? Dudes dig it more. No, it's I don't know. Like, look, if you're a pro, you have the right tools, right? And the funny thing is, it's no big deal. I bought most of this crap, so long ago. It's ridiculous, right? This is this is ancient history. I'm thinking about replacing all this junk. Um, but it is my tool. It is my job. I use them a lot, you know, and it's very important for me as a foreign exchange trader to be able to watch various currencies against other currencies, not just euro dollar, but euro dollar, euro yen, all that kind of stuff, and see a lot of different things. So I can say, "Oh, look at that. Oh, look at that." And I wonder about that. And I can get some information very, very quickly. Things like correlation and responses to news events, that kind of stuff. But I also need to know multiple time frames. So it's irrelevant for someone to say, well, what's the Euro USD doing? And give them only an idea of a 15-minute chart. There's no context to it, right? So I have to say, well, what's it doing on the 15-minute? Like just lining up oscillators. I did a whole thing on lining up oscillators, right? So the 15-minute is three-quarters of the way down, but is on the inside of the range. Okay, hourly is trying to complete its cycle and it's near support. 4 hours near the 21, but we're diverging. An hourly Stokes wants to drop, so Euro USD looks like it could head back down. You know, it's nice to be able to get that in less than 2 seconds. It takes me way longer to say it out loud. And did you notice what I did? I'm looking at Euro USD. I'm looking at it now. You can barely see my head move. I'm looking way over here, guys. Okay, you have to flip your charts, right? And your charts have to load. I'm catching all of this data and I'm barely moving my eye. And then I say, well, what about Euro Yen? And then I can go, well, what was this oscillator here? Oh, well, that oscillator. They're different. They're the same. And I'm making decisions and I barely have to even move my head. You have to change your charts and change your screens and change your workspace, and it takes MT4 6 seconds to do it, and then you got to go back, and I'm just like, boom, boom, I'm done. Okay, and I can go. What about this? What about this? What about that? Which one? Euro yen or pound yen? Okay, I like the pound yen a little bit better, but what does that mean for pound dollar? Oh, good. I see it on both. So I got some pound weakness and some yen strength. Your USD yen over here. Okay, well, actually, dollar's a little stronger, so I will go with the pound dollar first. What's the Dixie doing? Dixie? Okay, well, we are at resistance, so that could come back down. So I'll do the pound dollar first, get that cycle on the 15, and then take the next one on the pound yen. And there's no way you could do that on a laptop. I'm boom, I'm on like 9 levels higher in the analysis, and I'm doing it in seconds, right? I'm looking at correlation, I'm looking at intermarket stuff, I'm looking at multiple time frames, I'm timing oscillator cycles between currency pairs, and it's just redonkulous. Okay? It's not even fair. Okay? Yeah. It's, but well, the funny thing is, I have another six that I'm not even using. Oh, did I hurt your feelings, Tony? I don't remember a lot of questions, bro. Someone else asked me, Tony. right out of the chart, or right out of the chat. Someone said, let me get the quote. I don't even see it anymore. Where is it now? La, 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 la. Oh, there it is. It's above the joke. Wayne, why do you have so many screens? There you go. Yeah, I'm not trying to impress anybody. This is old stuff I've had for 6 or 7 years. So, yeah, USD Swiss franc, I'd be happy to. Do, 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 do. Do, 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 do. Boom, 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 boom. Tony says, boring, boring, boring. Okay. All right, so the first thing I'll look at here is the angled separation between the 2155 on this 4 hour. Seems like a fairly strong trend toward Swiss franc. But notice that we are starting to slow down. Price is having trouble making lower lows, and you're starting to see this with the oscillator. The oscillator is actually trying to rise, even though we're making lower lows, but each low is less low. So perhaps if this consolidation continues, we'll probably come back, top out at the top of this range. Let me mark it. Okay, which means we'll come back and revisit the 55. Okay. The other thing that you could do, of course, is just trap it in a range and let it break one way or the other and then catch the pullback. Okay. So there's that. Maybe some sideways action. What does it look like on the 15 now? Okay. This is not a good double bottom, but someone could play it like this. So what you do now, because you have a high higher than the previous high, how should I draw this for you? Let's do it this way. No, that wouldn't be right. Let's do it this way. Come on. Come on. Oh, there you go. I guess I'll do it like this. Okay. So now what you would expect is you would measure like a retracement and you'd probably go up in here. Okay. The way that you'd look at it is you do a Fibonacci retracement, treat it like a double bottom, make this, I'm eyeballing it. Really, I'd probably guess more of a 618 normally on this, but let's just play it there. So the 50% predicts a 1382. So I would draw it like that. Okay. Okay. So again, what you're looking at is probably more like a double bottom, higher high, higher low, higher high up into that area. Excuse me. Okay. Oh yeah. Oh, you're on, Tony. Well, Tony's free to ask questions. That's why I'm here. I just don't remember Tony actually asking the question. But feel free to ask a question, Tony. I'm here to help, man. Okay? But really, I think on this higher time frame, it's a bit of a consolidation move. We have to be cognizant of that. So that means at some point, perhaps US dollar would potentially, right? The US dollar would potentially strengthen. And so I would prepare to look for that, right? Because I'm okay. I'm not upset if the dollar strengthens. I understand why it's weak, and that has to do with repricing of assets based on only 2 rate hikes. But 2 rate hikes is still a good thing on the long run compared to everybody else. Don't forget today we got the World Economic Outlook. Excuse me. Me. And this is very, very important. It's stuff that we talked about 6 months ago that today would be an important day to start, or when the World Economic Outlook comes out, it'll be very important. I don't want to look at pound Kiwi, actually. So it's just a convoluted cross. I'm not necessarily bullish or bearish on either of them, so I'm sorry. Yeah, it's yeah. I don't know if I have anything to say about it. Is the issue, right? So I'll find myself finding something to talk about, but I can tell you that both are bearish and both have the potential to regain strength. Trade them together doesn't make sense to me, and so that's why I would rather say no. I would just never do it. So Kenny says there was a great move and he was in it. Fantastic. So that's probably just my, I don't trade it, so maybe it's my downfall. But there's plenty of other things to trade before I get into crosses. Well, Rick, we're supposed to be looking at this second quarter as a turning point for British pound, but it doesn't mean we're there we're there yet. Okay? For example, one of the key things that I've been waiting for is for the IMF in the World Economic Outlook to give a surprisingly good forecast for the UK economy. But that hasn't happened yet. That's going to happen in a bit. You know what I mean? Today. But I don't know if that's going to happen. But I can tell you that's a turning point for me. Maybe that becomes a turning point for the market. And remember, the people on TV and in the newspapers are probably not going to seriously talk about that for several weeks, maybe a few months, and then they'll say, "Oh, well, see the IMF report." So I don't know. To me, it's a bit early, and again, going back to the pound Kiwi idea, it's just to me, I'm bearish on both. I'm prepared to be bullish on both, but it's the same thing. Our job is to take strong and weak and put them together. Okay? And if I had missed an opportunity on that, that's fine. I'm willing to miss it because of, my bias. Okay? Yeah. And if I missed anything on the pound Kiwi today or yesterday, I made it up on pound yen and euro yen, so don't worry about me none. Oh, Ryan is if the stock market goes down, then that means strong USD. Just like, well, the correlation between the U.S. stock market and the dollar has been changing. So be careful. But I feel that the correlation between the yen and the stock market still seem to be strong. Okay. So we got to be careful with those correlations. Correlations can and do and will change. And I have noticed a big change in that the dollar stock market correlation. Okay. So like for example, the stock market used to go up and the dollar would get strong because foreigners were buying into the stock market. There was nothing else to do. China was falling. So what were you going to do? Well, buy S&P 500. But things may change. So be careful. I feel like we're in that process of change. And yeah, I think we're out of time here. I'm going to have to, I have lots of reading to do today, so we got to cut it here with the IMF going to come out here. So uh, I just posted it. It comes out at 1400 GMT. So peace on earth. May the pips be with you. May your profits be above average. And Tony, if the webinar is boring, please ask questions, collaborate, and participate. We'll do our best to make you happy, Brew. Take care, guys.